In a shocking overnight move that has Wall Street trembling and Washington scrambling, China has just dumped a jaw-dropping $2 trillion in U.S. Treasuries, setting off alarm bells across the American economy. Former President Donald Trump is reportedly in disbelief, calling this the most dangerous financial sabotage America has ever seen without a single missile fired. But what triggered this sudden and devastating blow to U.S. financial stability? Was it part of a bigger economic revenge plan? And what happens now that the world's second-largest economy has seemingly declared economic war on the U.S. without even making a formal announcement? Buckle up, because this financial earthquake is bigger than anyone predicted, and it might just reshape the entire global order. Just hours after Beijing's state-controlled media hinted at reducing exposure to unstable assets, Chinese central banks began liquidating U.S. debt at an unprecedented scale. Analysts confirm this isn't a market fluctuation, it's a full-blown treasury dump, one designed to strike at the very heart of American financial dominance. The ripple effects? Already catastrophic. The U.S. dollar plunged, interest rates spiked, and panic selling started in global markets from Tokyo to Frankfurt. What's even more shocking is that this appears to be coordinated retaliation. Insiders suggest this is Beijing's answer to the latest round of U.S. tariffs, sanctions, and tech restrictions. According to leaked intelligence briefings, Chinese policymakers had been planning this move for months, quietly pulling out of American debt markets while forming new pacts with BRICS nations. But here's where the story takes an even darker twist. Just one day before the dump, top Chinese officials met with oil giants from Saudi Arabia and Iran, signing off on a new initiative to price oil in yuan, not dollars. The goal? Undermine the petrodollar system and dismantle America's currency supremacy from within. At the same time, Russia and China announced a new sovereign financial alliance, bypassing the SWIFT system and moving to settle all trades in local currencies. Experts now warn that if more countries follow China's lead, this could mean the end of the U.S. dollar as the world's reserve currency. Trump, who has long warned about China's manipulation of currency and trade, called it a premeditated attack and demanded emergency financial action, but markets reacted with sheer volatility. The Dow fell over 1,200 points in just hours. Treasury Secretary Janet Yellen is reportedly in crisis meetings with the Fed, exploring drastic measures including refreezing Chinese assets and triggering emergency bond buybacks. But here's the twist no one saw coming. The Biden administration may have had warning signs weeks in advance and did nothing to stop it. According to investigative reports, economic advisors downplayed the risk, ignoring multiple red flags from Asian markets. Meanwhile, China is already benefiting, with its yuan rising in global trade and a new $500 billion infrastructure deal signed with ASEAN nations, all outside U.S. financial channels. This isn't just an economic event. It's a geopolitical shift. If China's strategy continues, America could face long-term inflation, weaker global influence, and a rapidly declining bond market. Investors are now fleeing treasuries, gold prices are spiking, and foreign countries are reconsidering their holdings in American debt. The World Bank has issued a high-level alert. Even longtime U.S. allies are calling for emergency G7 meetings, questioning America's ability to safeguard global financial security. Is this the collapse experts warned us about? Could this be China's ultimate checkmate against the U.S. economy? And what does this mean for everyday Americans? Their jobs, their mortgages, their savings? The full fallout is still unfolding, but one thing is clear. This wasn't just a sell-off, this was a message. And the world is now watching how the United States responds to the most dangerous financial betrayal of the decade. Stay tuned, because the next 72 hours could define the future of global economics. Subscribe to our channel for real-time updates as this crisis unfolds.